Hello and welcome to Stoxies. Today we're talking about Titan Cement. Titan is not just a Greek company, it's a multinational listed on the Belgian Stock Exchange, offering opportunities that many investors may overlook. With a dividend yield close to 6% and a strong presence in the United States, the company combines steady income with wide geographic exposure. This makes it particularly attractive in a sector that is cyclical but shows promising long-term growth. If you want to see clearly whether this stock has real value or hides risks that aren't obvious at first glance, stay until the end. We'll analyze both the bullish and bearish scenarios, and I'll share the key points I personally examine before deciding whether to invest. Let's take a closer look at what Titan Cement is and why it's not just a Greek company. Titan is an international group in the construction materials sector, with core activities in producing cement, ready-mix concrete, and aggregates. Its presence is global, and its growth strategy relies on both organic expansion and strategic acquisitions. A key part of its success is international geographic diversification. Titan has a strong presence in the United States, where demand for infrastructure and construction remains high, and also operates in Greece, Europe, the Balkans, and Egypt. This variety of markets reduces dependence on the economic conditions of a single country and provides revenue stability. At the same time, Titan has built a strong production network through acquisitions. Moves like entering the US market with Tarmac America and expanding in the Balkans and Egypt have given the company strategic positions in key markets and strengthened its production and distribution capabilities. In short, Titan is not just a cement company. It is a global player in infrastructure, with stable cash flows, worldwide presence, and strategic moves that set it apart from competitors. Let's take a closer look at Titan Cement's key financials, the figures that show its stability and potential. The company has a market capitalization of around €3.4 billion, placing it among mid-sized companies in Europe. This means it has enough size to operate internationally, while maintaining the flexibility to invest in new markets and acquisitions. Its price-to-earnings (PE) ratio is around 14, indicating that the stock is reasonably valued for a cyclical sector like construction materials. This can make it attractive for investors seeking value stocks. One of the most interesting figures is the dividend yield, which approaches 6%. This means investors receive income regardless of short-term price fluctuations, making it an appealing choice for those looking for stable cash flow. At the same time, it's worth noting that earnings per share have recently declined, showing that the company is affected by market conditions and rising costs of raw materials and energy. Overall, Titan exhibits the characteristics of a stable value stock with income, but it also carries the risks of a cyclical and international sector. Let's now look at Titan Cement's growth prospects and how the company is building its future. Titan does not rely solely on organic growth. A large part of its international strength comes from strategic acquisitions in key markets. From entering the US through the acquisition of Tarmac America to acquiring units in the Balkans and Egypt, the company has built a strong production and distribution network. These moves have strengthened both production capacity and access to markets with high demand for construction materials. In the US, Titan's presence is a key growth driver, as the market remains strong due to investments in infrastructure and construction. At the same time, steady demand in Europe and Greece supports revenues and limits dependence on a single market. The company's strategy shows that it actively creates growth rather than waiting for it. Every acquisition and investment reinforces its global presence and mitigates the risks of a cyclical sector. In short, Titan's growth is based on a combination of organic expansion and targeted acquisitions, making it a company with a long-term strategy and a global presence in the infrastructure sector. Let's now take a closer look at Titan Cement's stock performance. Over the past 5 years, the stock has experienced significant volatility, reflecting both sector conditions and the international markets where it operates. During 2019 and 2020, the stock price was much lower, hitting a pandemic low of around 8.3 in March 2020. From that point, a gradual recovery began over the following years. In 2021 and 2022, the stock showed some fluctuations but gradually improved, while in 2023, it began recording stronger gains. That year, Titan closed significantly higher than previous years, with a rise of approximately 80% compared to the start of 2023. The momentum continued in 2024, with the stock increasing further by about 90%, reaching levels higher than any in the past 5 years. Overall, from 2019 to 2026, Titan has recorded total gains of several 100%, showing a remarkable transformation from the pandemic lows to the current market highs. Over the last year, Titan Cement's stock experienced significant volatility, but ultimately recorded a net gain. About 12 months ago, the stock was trading around €34 per share, which was the low point of the year. Following this, the stock gradually rose in price. During the year, it reached a high of approximately €59, marking the peak of the 12-month period and showing strong market interest and improved momentum. These levels represented substantial gains for investors who bought at lower prices. Towards the end of the period, the price pulled back from the highs, but remained significantly higher compared to the same month a year ago. Today, the stock trades around €44 and €46 per share, reflecting a total gain of approximately 7 to 10% year over year. This range, from roughly €34 to nearly €59, illustrates that the stock experienced a strong rally during most of the year, followed by a recent correction and stabilization at more moderate levels. It highlights the balance between growth expectations and short-term market pressures. Let's now look at the bullish scenario for Titan and why it can be considered an attractive investment. A key advantage is that the stock may be undervalued relative to its true worth. Despite its international presence and growth potential, the market appears not to have fully priced in its strengths, creating an opportunity for investors. Titan has stable cash flows, which allows it to maintain a high dividend distribution. The dividend yield, around 6%, provides investors with steady income, regardless of short-term fluctuations in the stock price. Additionally, its strong presence in the United States and continuous expansion in European markets enhance its prospects. These markets have significant demand due to infrastructure and construction projects, while strategic acquisitions have increased production capacity and access to new markets. Overall, the bullish scenario is based on Titan combining reasonable valuation, stable income, and geographic diversification, characteristics that can lead to long-term stock appreciation. Let's now examine the bearish scenario for Titan Cement and the risks every investor should be aware of. First, the construction materials sector is cyclical. Cement companies are directly affected by the construction and infrastructure cycle, so during economic slowdowns, demand for their products can decline significantly. Additionally, Titan has recently faced pressure on profit margins due to rising raw material and energy costs. This can limit earnings even if sales remain steady, impacting the attractiveness of the stock. There is also regulatory and environmental risk. Stricter rules on carbon emissions and changes in environmental legislation may increase production costs or restrict the company's operational flexibility. Finally, dependence on the economic cycle in key markets, such as the United States and Europe, means that Titan may be affected by macroeconomic slowdowns or political uncertainties. Overall, the bearish scenario shows that despite its growth prospects, the stock is not without risks and requires careful assessment before making any investment decision. Now let's look at analyst estimates for Titan Cement and how these translate into potential prices under bullish and bearish scenarios. In the bullish scenario, the price target is approximately 55 to 58 euros. This implies upside potential of around 25 to 32% if the company continues to deliver strong results and leverage its presence in key markets, such as the United States. In the bearish scenario, considering the cyclical nature of the sector, higher production costs, and potential economic pressures, the stock could move toward 38 and 40 euros. This corresponds to a decline of roughly 9 to 14% from current levels. In short, analysts see the stock as having upside potential in a positive environment, while the downside remains present but relatively limited, provided the company's core fundamentals remain stable. Let's wrap up with a comprehensive summary for Titan Cement and what all this means for investors. In the bullish scenario, Titan can benefit from growth in the US and European markets, stable cash flows, and a high dividend. If everything goes well, the stock could move upward, offering significant returns and fully capitalizing on the strategic acquisitions the company has made. In the bearish scenario, Titan faces the cyclical nature of the sector, margin pressures, regulatory and environmental risks, and dependence on the economic cycle. In this case, the stock may trade sideways or even decline, requiring careful monitoring by investors. The final takeaway is that Titan is a value and income stock, suitable for investors seeking stability and dividends, but caution is needed due to cyclical and macroeconomic risks. If you found this analysis useful, subscribe for more stock presentations and comment on which stock you want to see in the next video. This way, you'll always stay updated and gain a more complete picture before making any investment decisions.